out. And of course the highest high of the peak. So we call the bottom a trough and the top a peak. So from the trough to the peak, the market can correct back 38%, 50, 618, 78, 100. Even corrections can even take more meaning than 100% of full correction. We can go 127 and 1618 of the overall move. Here we have our traditional, if the market has a rally and we're near a pivot support and we get, lo and behold, a high close doji trigger, we take our low point to our high point, and we can determine if this market is just going into a pause or if it's going to resume the trend or reverse the trend. If the market holds for the rule, for the most part, 50 to 618 correction and does not close below the 50 or 618 correction number, then it's probably going to expand and continue its general trend range. In other words, what I mean by that is if this is the trend, if this is the consolidation, it's going to resume the trend. Remember, markets go in trends. They go in trend, consolidation, and in that consolidation, we don't know if they're going to resume the trend or if they're going to reverse the trend. But by looking from point A to point B, whatever that correction is, if it holds 50% to the 618% number, okay? If it holds that, generally, as it does here, 50%. Notice this low holds 50%. Then generally we're safe to assume that this market continue up. That doesn't mean that if you're long from a high close doji trigger here, you're out of harm's way. Again, notice that we had a nice buy signal here, and then the market gave a sell signal or a low close. I don't know if this market's going to go down. I don't know if this market's going to just pause and then take off. Therefore, why don't I put a stop at break even and get out of partial positions and let it figure it out later? That's why I use that type of trading approach. Besides, you can always get back in the market if you so really feel that you're missing an opportunity. And by the way, do you see this doji here? We have another buy signal here that occurs after the market hit its 50% correction. We have another high close doji that occurs and would allow you to get back into a trade anyway. So by buying in the market, by scaling out, by putting your stop at break even, if the market truly is going to continue up, you shouldn't have to worry about your stops getting hit. And besides, by scaling out, didn't you make money for the day? And the answer is yes. How do we use Fibonacci correction levels? Well, real simple. Fibonacci, we determine point A to point B, and we can use them for not only up markets, but also down markets. If the market's truly bearish, it should hold its, 50% and 618 correction levels. See this down red candle? Would that not be a benchmark? And would not the midpoint act as resistance? Notice that from the high to the low, the coincident factor is Fibonacci at the midpoint of that benchmark breakdown candle is 38%. Isn't that something? So therefore, by just using little subtle, simple techniques, you can not or remove complication from your trading approach to the market. I know that that's a benchmark breakdown candle, and I'm going to look to see if 50% of the benchmark's real body holds as resistance, and it should if the market's truly bearish, and it does. It just so happens it coincides with a Fibonacci retrace level. So rejection at the 38%, it confirms what? That sell signal in the market as well. Now what about the golden ratio, the 618? Well, you want to sell or buy 618 retracements until prices closes above or below the resistance or support level. That's the best way to trade this. So let's take a look at this. We have point A at resistance. Notice the doji. This is Australian dollar. This is a 15-minute time period. This is the Forex market. We have point B, the low as we know it at that point in time. That's the low. Look at the retrace. Market comes back to the 618 level right here. At that point in time, if this market truly is bearish, it should not close above that 618, and it doesn't. In fact, price is rejected sharply, and we continue a downtrend. So therefore, watching that 618